Hello, dear students. How are you all? I hope you all are able to hear me. Hi, everybody. This is Professor Pritesh Veera here from HiQ. I am here to help you in the subject of economics. I'll be covering not only micro but also taking care of your macroeconomics part. Beta, it will be in English, but if at all you have any doubts, I will definitely be able to solve it in Hindi as well. तो आपको जैसा चाहिए रहेगा उस तरीके से हम करेंगे बट आई बिलीव मेजॉरिटी ऑफ यू ऑल आर फ्रॉम चेन्नई and the south region of our country, so the preferable language should be English. But if at all you have any difficulty in understanding any concepts, I would be more than happy to help you in Hindi as well. I know koncham koncham Tamil, so maybe in Tamil as well, but I really know very less of Tamil. Good evening, Shiv Kumar. Good evening, Nandini. Welcome to the class today. I hope you all are doing really very well. क्या हो गया रोहन? कुछ नहीं हुआ, सब बढ़िया है. आप बताओ कैसी चल रही है प्रिपरेशन? How's the preparation going on for your CA Foundation exams in the month of Jan? I hope we all are ready for it. Yes, dear students. Yes, Akshay, it will be in English. Do not worry. Hello, Faridul. Very good evening to you. Welcome to today's class. I'll introduce myself one last time. My name is Professor Pritesh Veera. I'm here to take care of your business economics. We'll try to cover not only micro but also macroeconomics, because I believe that there are a lot of difficulties that we face in macroeconomics. Yes, dear students. Shall we go ahead? Shall we start? Get set, po. All right then. I think we should be ready to go. And I plan to first explain you and give you a quick revision of national income. Yes, dear students. So I believe most of us have difficulty in understanding the concept of national income. So today our target will be definitely to complete one chapter from macroeconomics, and if time permits, I might go to one chapter from micro as well. Yes, students, can I have some reply in the chat box from you? Are you all there? Hello, Faridul, Akshaya, Sanjay, Rohan, David. Shall we start with national income? Hello, good evening, good evening. Welcome to the class today. All right, then I think it's good to go ahead with the chapter of national income. So, beta, whenever we talk about income, there are two types of income. One is called as earns in, is called as income. So I repeat, anything that comes in is called as income, and earned income is that income which we generate because of creation of goods and services. So dear students, always remember that in national income we consider only the amount of goods and services which are produced in the economy. Now, whenever we talk about national income, it is for goods and services. It is an economic activity and therefore called as earned income. Whereas, whenever we talk about unearned income, it is without the exchange of goods and services, and therefore it is a non-economic activity. And whenever we talk about non-economic activity, it is a part of our transfer payment. So dear students, we only include the earned part of national income. We do not include unearned income. Are we clear with that? Are we sure about it? National income is divided into क्या हो गया भाई? ऐसे कैसे? देख अभी हुआ? ओके, चलेगा 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 चलेगा. So I am back. I hope you all are able to hear me. Give me a thumbs up in the chat box or maybe a yes. I think there was some minor internet issue that we were facing, and I hope that has been resolved now. Are you all there with me? All right. So I think I'll just give a restart of national income. Now, whenever we use the word national income, can I say it is the income of the nation? Yes or no, dear students? Now, whenever we use the word nation, in a nation, we have population. So, national income is the income of the population of the country. Now, income can be of two types. Either it can be earned income or it can be unearned income. Earned income is for earned, that is for goods and services which are produced in our economy. Now, whenever the goods and services are produced, it is an economic activity, therefore it is called as earned income. So dear students, always remember that only earned income is included in national income, whereas unearned income is excluded from the calculation of national income. Yes, dear students, earned income is also called as economic income, whereas unearned income is also called as a transfer payment or a non-economic income. Now, this income is not included in national income. The reason being that there are no goods and services which are produced. So always remember, national income is the money valuation of all the goods and services which are produced in the economy. Are we clear with that? So now we come to a concept called as economic growth and development. Now, what is economic growth and development? But a growth is quantitative, whereas development is qualitative. Quantitative means rise in output, that is rise in GDP. GDP is nothing else but our national income, gross domestic product. If GDP rises, there will be a rise in per capita income, and if per capita income rises, there will be a rise in per capita consumption. So as we earn income, we will spend that income. So what is growth? Growth is the rise in output. And development means it is qualitative. So if I have to explain what is growth, growth is quantitative, whereas development is qualitative. Now, when we use the word qualitative, it means that it includes not only quantitative part, but the welfare part of the economy as well. In an economy, we all desire to have that welfare. Like there should be rise in life expectancy, there should be a rise in literacy rate, there should be a rise in employment, there should be a rise in fall in infant mortality rate, a fall in poverty, fall in crime rate, etc. All these are a part of welfare activities. So economic growth is quantitative, whereas economic development is qualitative. Are we clear with that, dear students? Yes, give me a reply in the chat box. Everybody, are we clear? Are we understanding? Is there anything that you have not understood? Please post it in the chat box so that I can help you. Hey there, are you able to hear me? All right. Next up is national income's formula. Now, national income is nothing else but price into quantity. Now, price into quantity, I have taken an example wherein the prices in the year 2013 were 100, whereas in the year 2023, I have taken two possibilities, A and B. So when you multiply the money valuation of all the goods and services produced, we get national income. So price into quantity is our national income. 100 rupees is the average price. 1000 is the normal units which are sold. Now national income is 1 lakh. But in the year 2023, the prices have risen to 150, output is 1000, and our national income is 1,50,000. So dear students, in option A, that national income is 1,50,000. In option B as well, the national income is 1,50,000. In option B, I have kept prices at 100 and output at 1500. So in option A, national income is rising due to the rise in price. Whereas in option B, the national income is rising due to the rise in output. So now you tell me, dear students, which is a better alternative? Should national income rise due to the rise in price, or should it rise due to the rise in output? The natural answer is it has to be due to the rise in output. So even in the first case, that is A case, the national income has risen, but it is due to the rise in price, and therefore it is called as false growth. Whereas when I talk about B option, the national income has risen, and the reason behind the rise in national income is the rise in output. So we call it as real growth. So what growth do we desire? In an economy, what do we want? We want false growth, or do we want real growth? Dear students, false growth would represent that the prices have risen, there is inflation in our economy. Whereas real growth will represent the output that has increased in our country. So national income should rise not due to the rise in price, but it should rise due to the rise in output. I hope we are clear with that. So if you have to choose between false growth and real growth, please choose real growth. Real growth is due to the rise in output, not due to the rise in price, whereas false growth is due to the rise in prices and not due to the rise in output. Now, national income can be measured either at current year prices, or it can be measured at base year prices. Yes or no? Now, whenever you talk about national income being measured at base year prices, now whenever you talk about base year, it is a constant year. It is a year in which prices are more or less stable, economy is stable, and there have been no unforeseen or not so normal economic activities. So when in a year activities are normal, we call it as a base year. And when the economic activities are not normal, something unusual has occurred, then we cannot consider it as a base year. So national income can be calculated either at base year prices, or it can be calculated at current year prices. Yes, dear students. Now, whenever we calculate national income at current year prices, we call it as nominal national income. So price of current year, quantity also of the current year. When price and quantity both are of the current year, we call it as base year prices. No, we call it as nominal national income. So nominal national income is a formula where prices as well as output both are taken from the current year. Whereas in real national income, we consider the prices of the base year and quantity of the current year. That formula will give you real national income. So dear students, there are two ways to measure national income. Either we can measure it at current year prices, or we can measure it at base year prices. If we measure national income at current year prices, then we get nominal national income. Whereas if we measure national income at base year prices, then we call it as real national income. Now, the difference between nominal and real is nothing else but the prices that we have considered. So, in nominal national income, we take the price of the current year, whereas in real national income, we take the prices of the base year. So when you compare current year prices with base year prices, we will get to know whether there is inflation or there is recession. So for that purpose, we have a concept called as GDP inflator. I repeat, the name of the concept is GDP inflator, whose formula is nominal national income upon real national income. Now suppose if the value is above 100, then it would mean that there is inflation in our economy. For example, our nominal national income is 1,20,000. Our real national income is 1 lakh. Now whenever we do this, we will get the answer as these four zeros will get cut. Answer will be 100 and हाँ 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 पता नहीं यार, ऐसा स्क्रीन ब्लैंक हो गया था. ठीक है ना? ओके ओके ओके. All right. So I think the screen just faded away. Yes, dear students, are we clear till here? So now in this case, 120 minus 100 is equal to 20. 120 is the current year's index. We deduct 100 as the base year's index, and then what we get is the GDP deflator value, and we get to know that inflation is either 20%. Now if the value is below 100%, then we get as deflation. Are we clear, students? Are we sure about it? Alright. Now, national income can be either calculated at market price or it can be calculated at factor cost. Now, I am sure we all know what is the difference between market price and factor cost. So, dear students, market price includes the value of indirect taxes, and indirect taxes are unearned, whereas it excludes the value of subsidies which are earned. So can I say that market price includes the value of indirect taxes and excludes the value of subsidies? Indirect taxes are unearned, whereas subsidies are earned. So we should have included subsidies and excluded indirect taxes. And hence we calculate national income at factor cost, not at market price. Because market price includes what is unearned and excludes what is earned. Therefore, factor cost is a better method of evaluating national income, wherein we include what is earned and exclude what is unearned. So what do we include? We include subsidies and we exclude the indirect taxes. Now, whenever I have explained this concept with the help of an example. For example, Aditya has a liquor manufacturing company. Now that manufacturing company has a factor cost of rupees 100, but government charges 25 rupees tax in the form of GST, and its market price is 125. So the question is, national income should be calculated at what? 100 or 125? The answer is 100, as factor cost includes the payment which is made to the factors of production. So payment which is made to the factors of production is in the form of rent, wages, interest, and profits. Please remember that profits are a part of factor cost. Always remember that profits are a part of a factor cost. So 100 was the factor cost, 125 was the market price. The balance 25 rupees were taken away by the government in the form of indirect taxes. Now for what purpose is the government getting this indirect taxes? No purpose at all. And hence indirect taxes are considered as unearned. and therefore national income should not include what is unearned. It should not be calculated at market price. It should rather be calculated at market factor cost. Similarly, Aditya has a medicine company as well. Now to manufacture that medicine, he requires rupees 50, but government expects him to sell at rupees 40. So do you think that Aditya will bear a loss of rupees 10? Absolutely not. Aditya is going to get that 10 rupees from the government. And government has given those 10 rupees out of love, care and affection because Aditya is special to the government? No, because Aditya has invested that amount, because Aditya's factor cost was rupees 50, from which 40 is recovered from the market, 10 will be given by the government. So dear students, what is the conclusion? The conclusion is that market price includes what should have been included. K, market price includes what should have been excluded. Market price includes what should be excluded and excludes what should be included. So this is a wrong estimate of national income. Hence, factor cost is a better estimate than market price. So market price say better is factor cost. Always remember, factor cost includes only those things which should have been included and excludes those things which should have been excluded. Now, there are certain base concepts which we need to understand. Whenever we talk about GDP, the base formula is C plus I plus G plus X minus M. C for consumption expenditure, I for investment expenditure, G for government expenditure, X for exports and M for imports. This is our base formula, GDP at market price. Now, there are three adjustments that we need to make. Either we need to be at market price or we need to be at factor cost. The answer is we have to be at factor cost. So from market price to factor cost, we need to deduct indirect taxes and add subsidies. We can do a reverse calculation as well from factor cost to market price, which would be plus IT minus S. Now this plus IT minus S is the formula for net indirect taxes. The second adjustment is whether our economy is domestic or national. So domestic means within the country, whereas national means outside the country as well. So we include NFIA, that is net factor payment to abroad or net factor income from abroad. And the third adjustment is from gross to net. Now gross value and net value, the difference between the gross and the net value is the value of depreciation. Yes, dear students, are you all there with me? Are you all understanding? Please remember, if you have any doubts, just post it in the chat box. I will ensure that all your doubts are clear. I hope we all are clear till here. So now there are certain formulas. GDP at market price is equal to C plus I plus G plus X minus M. Now this is our base formula. But do we want it at market price? We want it at factor cost. So formula will be C plus I plus G plus X minus M minus IT plus S. That is nothing else but GDP at market price minus NIT. Then we have a formula called as GNP at market price. So from domestic we are moving ahead to national. So domestic and national, what is the difference between domestic and national? Domestic is within the country, whereas national is within as well as outside the country. So we give services. I can go abroad, take lectures. Teachers from abroad can come to India and take lectures in India. So there is a concept of receipts and payments. So formula for GNP at market price is equal to C plus I plus G plus X minus M plus R minus P. But is our economy only calculated at market price? No, we want it at factor cost. So the formula will become GNP at factor cost is equal to C plus I plus G plus X minus M plus R minus P minus IT plus S. Yes, dear students. Now, why did I deduct IT and S? Because I wanted it at factor cost. Why did I add R minus P? Because I wanted it to be at a national level. So GNP at market price is equal to GDP at market price plus NFIA minus NIT. Now all these values that I have given you are at gross value. But I want national income to be calculated at net value. So difference between gross and net is depreciation. So my next formula will be NDP at market price, which is equal to C plus I plus G plus X minus M minus depreciation. Now I do not want it at market price. I want it to be at factor cost. Therefore, the formula for NDP at factor cost will be C plus I plus G plus X minus M minus IT plus S minus D. Yes, dear students. Now, do we want it at domestic value or we want it at national value? The obvious answer is we want it at national. So NNP at market price is equal to C plus I plus G plus X minus M plus R minus P minus D. Why did we deduct D? Because net value. Why did we add R minus P? Because we are at national product. Now finally we need to know, do we want gross? ना gross नहीं, net चाहिए. Gross इल्ले, net सरी, domestic इल्ले, national सरी, market price इल्ले, factor cost सरी. So our formula will become NNP at factor cost is equal to C plus I plus G plus X minus M plus R minus P minus IT plus S minus D. And that, my dear students, is nothing else but our NNP at factor cost. And my NNP at factor cost is the national income. Yes, dear students, are you all there with me? Are you all understanding? I hope everything is clear with you all. Can I have a reply in the chat box telling me whether you have understood or not understood? I'll be more than happy to solve any of your doubts. Okay, Aditya, I hope you didn't mind me taking your example of being a liquor manufacturer. Okay, what about others? Sangeeta, Shivakumar, Tanuja, Nandini. Are we all clear? Hello, Mehek. Hi, Faridul. Thank you so much. Okay, Aditya. Thank you. Now, to measure national income, we have three methods. One is the output method, one is the income method, and one is the expenditure method. Now, under output method, the formula is value added is equal to value of output minus the value of input. Only then we will be able to get what is the value added. So, if suppose there are different sectors in the economy, primary, secondary, tertiary, value added method will help us to find out value at each stage of production. So dear students, the formula for value added is value of output minus value of input. Value of input can also be called as intermediate consumption, or it can be termed as purchases. Now what if the value of output is not given? So the formula can become value of output is equal to sales plus change in stock. Now the problem with this formula, or The problem with sales is that sales can be in the current year, but the value of goods can be produced in the previous year. And we all know that national income only includes the value of the current year production. Therefore, we add the concept of change in stock. So in sales, when I add change in stock, we will get the value of output in the current year, because the formula of change in stock is nothing else but closing stock at the end of the year minus the opening stock of the current year. So suppose at the end of the year, there is certain stock that I have with myself. It is produced in the current year but not sold. So it should be added in the value of sales. And we deduct the value of opening stock because this opening stock value has already been included in the previous year. So we cannot include it in the current year because opening stock of current year is nothing else but the closing stock of last year. So closing stock of last year was already included in national income in the last year. So we deduct the value of opening stock and we add the value of opening stock. So our final formula will become this: gross value added is equal to sales plus closing stock minus opening stock minus the value of input. Now, why did we deduct the value of input? Because we wanted to find out value added. So, dear students, what is the formula for output method? Output method formula will be value of output minus the value of input. Now, if you don't have the value of output, what can be done? It will be sales plus closing stock minus opening stock minus the value of input. That will give you gross value added. The next method that we have is nothing else but expenditure method. And dear students, the formula for expenditure method is nothing else but C plus I plus G plus X minus M. Now that is the base formula. GDP at market price is equal to C plus I plus G plus X minus M. Now when we talk about expenditure method, consumption expenditure is divided into two parts: private final consumption expenditure and government final consumption expenditure. These are the components of PFCE. What's included in government consumption expenditure? Defense, health, education. What's not included or excluded is pension, scholarship, unemployment allowances, because all these are unearned. They are transfer payments, and transfer payments are not included while estimating national income. What are the components of I? So gross domestic capital formation is nothing else but investment. When I talk about investment, I, that is gross domestic fixed capital formation. Gross domestic fixed capital formation. Then there is change in stock, that is your inventory investment. And then there is expenditure on acquisition of valuables. So in I, there are three components. What are the three components? Gross domestic fixed capital formation. Then there is something called as change in stock. And then there is something called as expenditure on acquisition of valuables. Whenever we talk about gross domestic capital formation, that is further divided into three parts. One is by the name of household domestic fixed capital formation. Only house is included. Then there is business domestic fixed capital formation, and then there is government domestic fixed capital formation. Business includes plant, machinery, tools and equipments. Government capital formation can include roadways, railways, airways, etc. Then comes something called as income method. The formula for income method is rent. In simple language, it will be rent plus wages plus interest plus profit plus mixed income. Yes, dear students, are you all there with me? Are we understanding and not receiving any doubts only? Either I am teaching so well that you all have understood everything, or I am teaching so poorly that you all are not able to understand anything. ரொம்ப நல்லா இருக்கு. Are we understanding? Okay, Aditya. Thank you, Deepika. Thank you, Nandini. Thank you, Faridul. So what is the formula for income method? Income method is also called as distribution or factor cost method. And the formula, as I said, rent, wages, interest and profit plus mixed income. Now what is wages? In economics language, wages is compensation to employees. A yes or no? Then there is operating surplus. Operating surplus is nothing else but your rent, interest and profit. Rest in peace. If you have not understood, then may you rest in peace. But if you have understood, RIP is not rest in peace. It is rent, interest and profits. These are your wages. And mixed income is earned by a self-employed person. So any person who is a self-employed will be entitled to earn something called as mixed income, whose factor payment is not distinguishable. It is a combined factor payment. So if there is a person who is self-employed, he owns his own shop. So he himself is the landlord, he himself is the laborer, he himself is the financer to the business, that is capitalist, and he himself is the entrepreneur. So when we get all the factors of production in one, we call that person as self-employed, and self-employed earns mixed income. So the formula for NDP at factor cost is equal to compensation to employees, that is wages, operating surplus, that is rent, interest and profit, plus mixed income. This will be your NDP at factor cost. And if you want to go to national product, NNP at factor cost, then we need to add NFIA. So dear students, from different methods we get different formula. You need to remember what are the different formulas using different methods. Whenever you do output method, we will get gross value added or GDP at market price, which is equal to value of output minus value of input, or it is sales plus closing stock minus opening stock minus the value of input. That is the formula from output method. If you want to calculate GDP at market price via expenditure method, then under expenditure method the formula is C plus I plus G plus X minus M. And if you want to calculate via income method, we do not get GDP at market price, we get NDP at factor cost. Because on my income there are no indirect taxes, and on income there is no depreciation. So we never get a gross value, we will never get a market price. If you want to get gross, you will have to add a depreciation, you will have to add indirect taxes and subsidies in order to get at factor cost. So depreciation will be added to get gross value, and in net indirect taxes will be added to get the market price. So dear students, these are the base formulas using different methods. Yes, dear students, can I have a reply once again in the chat box? Are we clear? Do I need to explain you anything from here? If not, then I think I want to make a move to our unit number 2. These are the most important concepts from national income. Then obviously there is private income and personal income, but which I believe are very easy for you to understand. If there are doubts, I will be solving. If not, then I will go ahead to unit 2. Any method you want me to discuss again? Any concept you want me to discuss again? So from unit 1 of national income, can I assume that all our doubts are cleared? After this also, beta, there are a couple of concepts by the name of private income and personal income. But I believe those are very simple concepts and can be done by you on your own. These were the concepts wherein you might have required my support. So quickly, everybody give me a reply in the chat box. Shall I go to unit 2? Type unit 2, unit 2, unit 2, unit 2 in the chat box. If you have doubts, then post your doubt. If no doubts, type unit 2, unit 2, unit 2 in the chat box. Thank you, Aditya. Only person to reply in the chat box is Aditya. Hey, what about others? Do you want me to discuss anything else? Thank you, Sangeeta. Thank you, Faridul. Thank you, Preeti. So I think, okay, Tanuja is also there. I think majority of us are sure that we are done with unit number 1. Alright then. We go to the concept of Keynesian theory. Now, Keynesian theory of determination of national income is a very important concept. Deepika, private income is the income of the private sector which is earned as well as unearned. So, mixed income is only earned, it is the factor payment. So, you can say that mixed income is a part of private income. Personal income is the income of an individual or the household. So private income is the income of the private sector, whereas personal income is a narrower concept. It is the income of only the household. It does not include the income of government. It does not include the income of the private sector as well. Yes, Deepika? Deepika, I'm waiting for you and your reply. I hope we are clear. Kamal, if there is anything specific that you want me to solve, I will. You need to let me know. So, suppose somebody had just said that how do you calculate NDP at factor cost or NDP at market price. So if the given information is you have GDP at market price which is 2000 crores and you have been given depreciation as 200, then Kamal, what is the answer for NDP at market price? NDP at market price is equal to GDP at market price minus depreciation, which is 2000 minus 200 upon 1800. So Kamal, if you have understood the formulas, then you will be able to solve the sums automatically. If you have not understood the formulas, then it will be difficult for you to solve the sums as well. So beta, this is a very limited time period that we have. If you have any specific sum in which you have a doubt, you can post it in the chat box. I will solve it for you. In the next 5 lectures, I have to cover the entire economics for you. So it will be practically impossible for me to solve sums on each method. Yes, Kamal. Do you want me to solve any specific sum from a specific method? Or is there anything specific in which you have a query? Thank you, Fahad. Thank you, Deepika. So Deepika, you need to remember that private income can be earned or unearned, but it is the income which is accrued to the private sector, does not include the income which is earned by public sector. Personal income is the income of the household. That also can be earned or unearned. Does not include the income of the government, does not include the income of the private sector. Of course, Kamal, they can be asked, definitely. Sums are asked. So maybe in the next lecture, if you want, you can come prepared with it. You can solve a few sums on your own. And if you have questions, you can ask me in the chat box. Now sums can be asked on income method, they can be asked on expenditure method, they can be asked via output method. So because you asked me, I'll just tell you one more thing. Now suppose the value of output is 4000, closing stock at the end of the year, no, not the value of output, rather the value of sales. Closing stock at the end of the year, say for example, is 400. Opening stock at the start of the year was, say for example, 1000, and the value of input is 800. So can you calculate national income and give it to me? So we know that gross value added at market price, which is also called as GDP at market price, is equal to sales plus closing stock minus opening stock minus the value of input. So if you know the formula, Kamal, you will be able to solve it. Now sales value is 4000, closing stock we need to add 400, opening stock was 1000, so I will deduct that value, and 800 is the value of input. So from 4400 we need to deduct 1800. So I believe the answer should be 2600. This is your gross domestic product at market price. Now they can ask you net domestic product, they can ask you net national product, and relevant information will be given to you in the exam. So Deepika and Kamal, I hope I have been able to help you out with whatever queries you had. Yes, Kamal, I'll be awaiting for your reply. Thank you, Kamal. Shall I go to unit 2 then? Alright. So I believe that most of your doubts are cleared from unit number 1, and I'm moving ahead to unit number 2. So beta, whenever we talk about Keynesian theory, we need to know that there is aggregate demand. Aggregate demand is the total demand of the economy. which is nothing else but C plus I plus G plus X minus M. Then there is aggregate supply. Now aggregate supply is nothing else but your production, which is dependent on factors of production, that is NLKT. N for natural resources, K for L for labor, K for capital, and T for technology. So aggregate demand is nothing else but the expenditure, whereas aggregate supply is nothing else but the income. Thank you, Deepika. Now we should know that consumption is a function of income. Consumption is dependent on income. So if income is zero, consumption cannot be zero. Such consumption is called as autonomous consumption, which is not dependent on income. Now if income rises, consumption will rise. Income falls, consumption will fall. Whenever there is a direct relationship, we will call it as B. B is nothing else but your induced consumption, which is dependent on income. So basically there are two types of consumption. One is called as autonomous, one is called as induced. Autonomous is not dependent on income, whereas induced is dependent on income. So formula for consumption will become C is equal to A plus BY. Consumption of a consumer can be either autonomous or induced. A for autonomous, BY for induced. A is not dependent on income, whereas B is dependent on income. So dear students, can I say Y is equal to consumption plus savings? Therefore, I can also write Y is equal to A plus BY plus S. Now, being students of economics, you should know that savings are equal to investment. Leakages should be equal to injections. So, you have studied two sector circular flow, three sector circular flow, and four sector circular flow. Now, dear students, when we study two sector model, under the two sector model, your aggregate demand should be equal to your aggregate supply. That is the point of equilibrium. Aggregate demand is nothing else but expenditure, aggregate supply is nothing else but your income. So beta, aggregate demand in a two sector model is equal to C plus I, whereas income is nothing else but C plus S. Under this, CC will get cancelled, therefore I is equal to S. So under two sector circular flow of national income, equilibrium will be achieved at a point where I is equal to S. Can I say investments are injections in the economy, and the amount of money that we save is the leakage. So the bottom line to understand this concept, Deepika, Aditya, Tanuja, Preeti, is that your injection should be equal to your leakages, your aggregate demand should be equal to aggregate supply, your expenditure should be equal to your income, which is under a two sector model. Can I have a reply in the chat box that we have understood this? Because if you have understood this, only then I will be able to go to 3 sector and then to 4 sector. Yes, dear students, can I have a reply in the chat box? Equilibrium is always achieved at a point where income is equal to expenditure. So aggregate supply is your income, aggregate demand is your expenditure. Your income has to be equal to your expenditure. Therefore, I has to be equal to S. Now if I go to 3 sector, again can I say aggregate demand should be equal to aggregate supply. Now in 3 sector, the formula will be C plus I plus G, that is government expenditure. So where does government finance its expenditure from? From taxes. So formula for aggregate supply will be C plus S plus T. Now Deepika, can I say CC is matching? Therefore, I plus G is equal to S plus T. So under 3 sector, the formula will become I plus G is equal to S plus T. Are we understanding? Give me a thumbs up again for 3 sector model. Can I say I plus G are the injections, whereas S plus T are the leakages in the economy? And the bottom line is again injection should be equal to leakages. Yes, everybody, can I have a reply in the chat box? Rombanalla understood. Thank you, Faridul. I am glad that you all have understood. That's wonderful, Aditya. May God bless you. Bless you. So now you tell me what should be the formula for 4 sector. Under 4 sector also we know that aggregate demand should be equal to aggregate supply. Aggregate demand is the expenditure, whereas aggregate supply is the income. But now instead of 3 sectors, we have 4 sectors. Thank you, Deepika. Thank you, Nandini. Thank you, Faridul. And thank you, Aditya. What about 10 others, 15 others? Kamal beta, I hope you are also understanding, my dear student. Now under 4 sector, the formula will be C plus I plus G plus X minus M. Whereas aggregate supply will be C plus S plus T. See, can I say exports will bring money in, but imports will take money away. So your imports should be a leakage. So what will be the formula? Formula will become C plus I plus G plus X is equal to C plus S plus T plus M. This M which is in minus over here will be taken to leakages side. Now can I say that again CC is matching? So where will we get our equilibrium? We will get our equilibrium at the point where I plus G plus X is equal to S plus T plus M. IGX, India's Got Talent. Ayyo, ill. IGX is nothing else but your injections, and S plus T plus M is nothing else but your leakages. And I have told multiple times that injection should be equal to leakages. Yes, dear students, can I have another thumbs up for 4 sector equilibrium? Have we understood the 4 sector as well? So in this unit, what have you studied? You have studied aggregate demand, aggregate supply, and the chapter further is divided into circular flow and determination of equilibrium level of national income. So two sector, three sector, and four sector. Dear students, in two sector model, can I say we only have household and business firm? Under three sector we have household, business firm, and government. Whereas under four sector we have household, business firm, government, and external sector, that is the foreign sector. Thank you, Kamal. Thank you, Aditya. Now, beta, in four sector there are two possibilities. Possibility number one is that X is greater than M. Now, if exports are greater than imports, then four sector income will be greater than three sector income, because exports will bring in earnings. So because of exports, our four sector income will be greater than the three sector income. But there is another possibility, which is a dangerous one, applicable to India most of the times, that exports are less than imports. Now if exports are less than imports, then it would automatically mean that our four sector income will be lesser than three sector income. A yes or no? Why is four sector income less? Because our imports are higher. And if imports are higher, it would mean that our expenditure is higher. So the national income that we will get from four sector when imports are more will be lesser than the three sector income. Because in three sector there was absolutely no import and export. Yes, dear students, have we understood? Are we sure? Now there are certain formulas. We need to know what is APC. APC is C upon S, sorry, C upon Y. Average propensity to consume is the ratio of total consumption to total savings. You need to know the formula of APS, which is equal to S upon Y. It is the ratio of savings to income. Now similarly we have a concept called as MPC, which is denoted by letter B, and we have MPS. MPC is equal to delta C upon delta Y. This delta is chota samosa. That chota samosa is very important. Khana nahi. Delta C is the change in consumption due to the change in income. Excuse me. It is the change in consumption due to the change in income. Yes, dear students, are you all there? Now MPS will be denoted by delta S upon delta Y. So average is per unit, whereas marginal is additional, extra, or last unit. I hope we all know that. Then we have studied the concept of multiplier. Multiplier is denoted by K, which is the change in income due to change in expenditure by the government. That is change in investment by the government. So if government has made a change in investment by 20 crores and the income is changing by 60 crores, therefore the value of multiplier will be delta y upon delta I, which is equal to 60 upon 20 crores. Your multiplier value is 3 times. So always remember that multiplier is into number of times. Income is called as the concept of multiplier. Yes, dear students, have you understood this? Are you all clear? Let me know in the chat box. I'll be patiently waiting for your doubts. If there is anything in which I can help you, किसका है ये तुमको इंतजार में हूं ना. So if you don't understand this in English, whom are you waiting for when I am here? Don't fear, when I am here, I will help you with whatever doubts you have in economics. Chalo, everybody, give me a reply in the chat box. Yes, 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 understood. Go ahead, go ahead. Okay, Sharanya, thank you. Thank you, Kamal. So, Kamal, can I say K can also be written as delta Y upon delta Y minus delta C? Do you agree with this? Since we know that I is equal to S, therefore delta I will be equal to delta S. Now formula for S is Y minus C. Therefore delta S will be equal to delta Y minus delta C. So instead of writing delta I, which is nothing else but delta S, which is nothing else but delta Y minus delta C, can I write this? Now I will divide this equation by delta Y. So what will I get? I will get delta Y upon delta Y, the whole divided by delta Y upon delta Y minus delta C upon delta Y. Now this delta Y upon delta Y will become 1. This will also become 1. And we know that delta C upon delta Y is nothing else but MPC. Therefore, formula will become 1 upon 1 minus MPC, or 1 upon 1 minus B, or 1 upon MPS, because 1 minus MPC is MPS. So dear students, I hope we also know that APC is equal to, rather, APC plus APS is equal to 1. Similarly, MPC plus MPS is equal to 1. Also remember that there is a direct relationship between MPC and K. Higher the value of MPC, higher will be the value of multiplier. Lower the value of MPC, lower will be the value of multiplier. I'll prove it to you. Suppose if MPC is 1, or if MPC is equal to 0.5, so the formula for K is 1 upon 1 minus MPC, which is equal to 1 upon 1 minus 1, which is equal to 1 upon 0, and the answer is infinity. So when MPC is equal to 1, the answer is infinite. Whereas if MPC is 0.5, then K will be equal to 1 upon 1 minus MPC, which is equal to 1 upon 1 minus 0.5, which is equal to 1 upon 0.5. So your answer will be 2 times. So if MPC was high, multiplier was high. If MPC is less, multiplier is less. Therefore, the relationship between MPC and K is direct. Yes, dear students, are you all understanding? Are we clear? Have you understood? Give me a reply in the chat box, everybody, quickly, quickly. So last 5 minutes into this chapter, then I'll be doing one chapter from microeconomics. I want to get a reply in the chat box from you all. The next concept that we have is an inflationary gap or a deflationary gap. Okay, thank you so much, Deepika, Nandini, and Preeti, Kamal, Shivani, Aditya. I hope we all are clear as well. Now, inflationary gap is a situation where aggregate demand is greater than aggregate supply. This results into excess demand, and therefore prices will rise. Whereas deflationary gap is a situation where aggregate demand is less than aggregate supply. Therefore, there is deficient demand, and therefore prices will fall. So there are two types of gaps, as the name suggests. Inflationary means prices will rise, and deflationary means prices will fall. So there are two gaps, inflationary gap and a deflationary gap. Alright, so I need a reply in the chat box as to whether we have understood the entire national income. Is there any other concept that you want me to revise in the chapter of national income? From my end, I have tried to give you the best possible revision of the entire national income chapter. I hope you realize that national income is a huge, huge, huge chapter. Tell me, can I help you with anything else in chapter national income? Kamal, Faridul, Preeti, Nandini, Deepak, Aditya, Saranya, anything that you want me to help in national income, please feel free. I am giving you 5 minutes. You need to let me know if there is a concept that you want me to revise in national income. If not, then I will go ahead to the next part. So you will have to go through in detail as well. Please understand that in a lecture of 1 hour, I cannot practically teach you the entire chapter, though I have tried my level best to explain you whichever possible concepts of national income. So this was just a quick revision of the chapter, wherein we have understood all the important points, tried to cover each and every aspect of this chapter. You need to let me know in chat box if you have any questions, queries or doubts. Mohammed, okay, I'm glad that you all have understood. Tanuja, Sangita, if you're there in the Zoom, YouTube live, I need to know from you. So Faridul, in three sector, who are the components? Consumption expenditure, investment expenditure, and government expenditure. Do you agree? So when I talk about three sector equilibrium, three sector equilibrium will be achieved when aggregate demand is equal to aggregate supply. Under three sector, we have the household, we have the business firm, and we have the government. Do you agree to that? Now, if you do, then aggregate demand should be equal to aggregate supply. Aggregate demand is C plus I plus G. C stands for consumption expenditure, I stands for investment expenditure, G stands for government expenditure. But where does government get its money to finance? It is from the taxes. So, aggregate supply is nothing else but your income. Income's formula is C plus S. But when there is government, there will be taxes as well. So your formula will become that aggregate demand is the expenditure, aggregate supply is the income, aggregate demand is equal to C plus I plus G, and aggregate supply is C plus S plus T. So C and C will get cancelled. Therefore, I plus G will become equal to S plus T. That is the point at which you will get equilibrium under three sector model, Faridul. Do you agree, Faridul? Everybody else in the Zoom class, YouTube live rather, if there is any other concept that you want me to revise, please feel free to ask me about that. Kamal, Sharanya, okay, that's wonderful, Faridul. So if there are no more further doubts, can we go to chapter number 1 of microeconomics? If yes, put a answer in the chat box. Chapter 1, chapter 1, chapter 1. Let me know in the chat box ASAP. Okay, everybody in the chat box, let me know that we are good to go for chapter number 1. I believe that microeconomics is your strong point, so should not be a problem for you. Thank you, Faridul. Thank you, Aditya. Thank you, Dibika. Okay, Nandini. Thank you so much. All right. So I believe that chapter number 1 is a very, very small chapter, and I do not believe that majority of y'all have a problem in that chapter, considering it's a very basic and an easy chapter to understand. So beta, the first chapter is by the name of business economics. Now whenever we talk about economics, we know that economics has been derived from a Greek word which is oikonomia. Oikonomia means household management. In every economy we know that human wants are unlimited and the resources to satisfy these human wants are limited. So when we talk about economics, the way we manage our house, we need to manage our economy as well. Economics, as I have told you earlier also, is derived from a Greek word which is by the name of oikonomia. Oikonomia means household management. Now there were four definitions which were given in economics. One was wealth oriented, given by Adam Smith. So material wealth means wealth which is created from goods and not from services. So please remember that whenever we talk about material wealth, it is the wealth that is created from goods and not from services. This definition was given by Adam Smith, who is also known as father of economics. The name of the book is An Inquiry into Nature and Causes of Wealth of Nations, given in the year 1776. And the type of economist is by the name of classical economist. Then there were few criticisms to the definition of wealth, because people believe that wealth is not the only thing. How you earn your wealth, how you spend your wealth, where you spend your wealth, how is the wealth created, where is the wealth created is equally important. So there is another definition by the name of material well-being or welfare. Now whenever we talk about material welfare, it was given by Alfred Marshall. The name of the book was Principles of Economics, written in the year 1890. These were neoclassical economists, and they believed that wealth should be created from goods which lead to welfare of the society. So Adam Smith used to believe that wealth can be created from goods which are either good or bad. They did not believe in merit goods, demerit goods. They believed that at the end of the day, it is important to generate wealth. If I have to use a Hindi proverb, ना बाप बड़ा ना भैया सबसे बड़ा रुपया, भाड़ में जाए जनता अपना काम बनता. So they did not think about how the wealth is created. For example, if Aditya is creating liquor and if Deepika is creating books, both will lead to wealth. But liquor will not lead to welfare, whereas books can lead to welfare. So Adam Smith was neutral. Adam Smith did not distinguish between what is good and what is bad. Then there is the most important definition, that is science of choice making or scarcity oriented definition. Why do we have to make a choice? We have to make a choice because resources are scarce, scarcity. So scarcity is the root cause of the problem of choice making. If we had abundance of resources, then there wouldn't have been any need for choosing. Yes or no? Are you all there? Yes. Now, Okay, just give me a minute. Seems there is some. साहिल हैंग हो गया रे। हाँ देख ना, मेरा वो जो टैब पर दिखता है ना डिस्प्ले, वो गायब हो गया। हाँ हाँ, चलेगा चलेगा। All right. So we are back again. So sorry for the inconvenience that you all are facing. So as I told you, that the root cause of all economic problems is nothing else but scarcity.